Here are 7 of the worst crypto mistakes most traders make, especially retail investors. And I've at one point or another made all of these mistakes. And I'm sharing this with you now so that in 2024 you start the year well and you give yourselves the best opportunity to make gains generally in crypto, whether that be involving yourself with meme coins, altcoins, Bitcoin, NFTs, doesn't matter. If recently, whilst everything's kind of been going up, you've actually struggled or you've not made the gains that you thought you would, then you really need to listen to some of these points. The first one is an obvious one. You see me repeating this all the time, not checking the charts. There are still some people who invest in crypto without looking at a single chart, or they'll look at a coin market cap chart. Now, there's nothing wrong with this. I'm on a coin market chart here. There's nothing wrong with it in general. But it really doesn't give you an idea of where we are, where we could be going. And the risk with something like this is you might be hearing about Solana now for the first time, or you closed yourself to crypto for 6 months or a year or something, and you're suddenly buying here because it just keeps going up and up and up, and it doesn't seem to stop going up. But you've not seen where the move is. You've not seen any resistance levels. You don't even need to do any technical analysis. Just pull open a chart and just make sure you're not buying after a massive move up, because that will literally save you. Because Solana could go either way. It could absolutely go up from here. We don't know. But it could also correct 30%. And we don't know for 100% sure if this is it for the next year or so. You never know for 100% sure. So please check a chart before you do anything. The chart will tell you what you need to know. You might invest in something where you have a quick look at the chart and you'll see that something's been going sideways for 2 years and still hasn't broken out. Well, looking at the chart saved you there from wasting time, because you could be in it for months whilst everything is going up and you'll be making nothing. You might not be losing any money, but you certainly won't be gaining any because you didn't bother to check a chart. So at the very basic level, open up TradingView. I'll leave a link below, or some other charting software, and have a quick look first, even if you're brand new. Next one. Second mistake, blindly following social media, especially, for example, when you hear about FUD. So if you remember everything from the FTX collapse, you'll know that at that time, there's a lot of FUD surrounding Solana. Many people thought it was just done, which is crazy because it was literally being used actively by a lot of people. Even when it comes to something just like trading NFTs, for example, they were very popular on the Solana blockchain. And this is one where a lot of smart money actually invested in Solana, and now they're up 10x or even actually more, whereas everybody else kind of walked away from Solana. So don't ever blindly follow social media, especially negative opinions on anything. Don't do that. Make your own decisions, but realize that sometimes when things are down, you could be buying them at a discount as well. Same goes even for me or anybody on YouTube. Don't just blindly follow anything that we're investing in, because first of all, the time you see the video will be different to when myself or somebody else has invested. And then secondly, whether you're even buying at the right price point that makes sense in terms of a risk-reward standpoint. Let's talk about the next one. This is Coq Inu, and it's a meme coin I've talked about quite a lot over the last kind of few weeks and stuff. And this illustrates my third mistake. I did all right in this, and the reason for that is I took profits. And a mistake, I've done this before as well in the past, was not taking profits. Massive mistake crypto investors make. Now, you could talk about these rare occurrences where if you just hold forever and hodl, everything would have gone up. But how many people do you know, maybe including yourself, who just hodled through the bear market and everything was down 70-80%? Always take profit. You'll remember more. If this keeps running and you already took profits here, then fair enough. You could argue that, well, it could have gone a little bit more than this and that wasn't the top and stuff like that. But you always kind of forget how much money you saved by taking profits. I always do. But when I actually look back over the last few weeks, at times when I pulled out, when I literally left so many altcoins and meme coins quickly, I can't tell you how many of them then went on and did quite a large correction. Some of them, yeah, absolutely, they may continue to go up, but a lot of them actually didn't. And I actually saved myself from massive 30-40% corrections. And if you add all of those 30-40% corrections and you keep taking those on your trading account, it's going to be a hell of a lot lower than when you first started. You have to take profits in cryptocurrency. You never know what the next week or month brings. Now you can trail upwards as well. So you can wait until you get a breakdown like this and a pullback and then take the profits. Absolutely. But you have to consider taking profits along the way. So if you're in profits, this is not financial advice. You'll obviously have to make your own decisions. And if it's money you can afford to lose and you have a lot of belief, shall we say, in whichever thing in crypto you're invested in, then fair enough. But still, a lot of you should be considering at least taking partial profits because like you said, you never know with cryptocurrency. And a lot of the time, people have been left holding the bag with cryptocurrencies, as we saw just before the bear market. Everybody in October 2021 was unbelievably bullish on social media, where there was only a few who were considering taking profits and moving on. So just think about that. Mistake number 5, and I'll use Bonk here as an example. So Bonk is a meme coin, a Solana meme coin that has done very, very well. And to give you an idea of how well it did, you will hear stories of people who made, this 12, 13,000%. So there were stories, and I've heard them, I've seen them on social media where people have invested, I think it was like $600 or $1,000 or something like that, and literally turned it into $1 million, $500,000 or even $1 million plus. Crazy. But you have to think of this as them being lottery winners. Now, they may be incredible investors, or they may have just bought and forgot about it, or they knew what they were doing and they invested in a lot of meme coins and they decided to just hold because things were running well. Who knows? But you have to think of them as lottery winners. What do I mean by that? This is rare. The stories you hear on social media are the rarities. It's the 1 in 10,000, 1 in 20,000. Yes, in a bull market, generally everybody's making money, but the ones who make the 10,000%, the 200, 300x returns, those are the fewer people. It definitely does happen, but it's not everybody. So don't have unrealistic expectations of fast wealth. This does happen, but more often than not, your trading account will slowly if you check on your central exchange like Coinbase or Binance or whatever, it'll slowly during a bull market, as long as you know what you're doing, you're rotating, you're in the right stuff, it'll slowly trend up. And that's healthy and that's what you want. And as long as you're diversified, and so you have at least 2 or 3 minimum investments, anywhere up to, I would say, 7 or 8 maximum. Any more than that, and it's just overcomplicating things, then you'll be doing all right in cryptocurrency. And this is more realistic. And if in the entire bull market, if it does run for another year or two, you make anywhere from 3x to 10x, you should consider yourself lucky and happy, because this is much more than what you'll get in the S&P 500 on a yearly basis, where average returns, if you take into account bullish years, bearish years, is like, 15% or something over the year, which means if you put 1,000 into the S&P 500, which is one of the biggest stock market indices in the world, you'll end the year with 1,150. Whereas in crypto, that 1,000 after a year, you should be looking to have turned it into 10,000. And that's 5 to 10,000. Maybe that's only an average. It's kind of hard to say because we don't know how the market's going to go this time around in 2024. So what's the 6th mistake? So many times, especially in the last few weeks, I've invested in something like Fetch.ai, which is an AI altcoin which has been doing well. And I've invested and I've traded a breakout. So I've traded here, I've gone for a breakout. You can see here a kind of liquidity range here. And then you can see the sweep for liquidity below. This is all classic kind of Wyckoff stuff almost. And then we had a really nice trade upwards and it went well for me. But I saw it setting up again and I tried the same thing again. And it hasn't worked out. However, it's only gone down a little bit. What did I do? I cut my losses. Very, very important in cryptocurrency. If you're down to 2%, 5%, maybe even 10%, that doesn't mean you just blindly hold and hope for the best. That's one of the worst mistakes in cryptocurrency. And believe me, I've been there. You blindly hold and you hope sometime in future things turn, or you're thinking, it's money you can afford to lose, so I'll just leave it there and not bother with it anymore. You could easily take the 10% loss, go into something else, jump into Solana or something, and make 20% in a few days. And then what did it ever matter? But if you just blindly hold it, first of all, it might be doing nothing for a while. Then it may go up. You don't know. It may grind down. But if this has gone against your thesis, so I was doing a breakout play. Clearly, that's not worked out. So what am I holding for now? I'm just holding for a coin flip. Yeah, maybe it'll go up, maybe it'll go down. That's no kind of trading strategy. You You have to have some sort of story behind your trade. You can't just be blindly doing it. Even if you're doing it for the wrong reasons, you still have to have some sort of rationale, because then you know that if that rationale doesn't come to fruition, and if it doesn't tick the boxes, you got 3 red boxes and it's not working out, none of these breakouts are working out for you, cut your losses. Big mistake most people in cryptocurrency probably make. And this is what causes people to hold bags that then go down 80, 90%. And the worst part of that 80, 90% is not only the fact that it's gone down, but this is probably after they made 10x on the way up. So literally they've lost all of that, well, you could call it hard work, or all of those gains. You don't want to do that. And that leads me on to my final mistake. And probably this is the most important one. This is the graph, so GRT-USD, another AI coin. And I was involved in this as well in January and February because we were having a good run. But I got to this point and things started coming down, and then I thought maybe there'll be another breakout, maybe there won't, we don't know for sure. But there never was another breakout, and that was the local top there. And then we just went down for the next 6 months. However, I took losses here, and I'm glad I did because I was able to get in at a better price. But my point is not learning from mistakes. I had made that mistake before about not taking profits or not cutting losses on new positions. But if you don't learn from your mistakes, then you're in trouble. If you've made a mistake already, so let's say you make a mistake today, probability states you're going to make the same mistake again, because humans, we always have the kind of same mindset, mentality, behaviors. But unless you learn, you change everything. You literally sit down and dissect this mistake and go through it all and have an awareness next time. So you're aware of any potential to make the same mistake. So let's say it's a similar setup. You're like, well, you just lost 80% in a meme coin. And then the next day you're about to trade another meme coin. If you don't have the awareness that that could happen again and an action plan to mitigate that, to prevent that same mistake from rising again, then you're going to struggle with cryptocurrency or any kind of investing because you're not learning from your mistakes. You're making the same one again and you're putting yourself in a worse position. And in terms of mindset as well, when you make the same mistake like 2, 3, 4 times in a row, not good for your confidence anyway. And in cryptocurrency, you need confidence because a lot of the time you are going to take risky trades, and you should take risky trades because it's all about risk reward. If something is giving you the potential of a 20x, you should be willing to take a 1x or 2x risk on it. That's worth it if it's worth 20x in a medium case scenario or best case scenario. But you're not going to take that risk if you've been burnt a few times with meme coins. Get burnt once or twice with meme coins, but not like 5 or 6 or even 20 times like some people do. That's madness. Don't want to get to that level. Hope this video helps, and I wish you all the best for 2024.